Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, April the 4th. The year's 2019. Let's talk trading. Horizontal lines, buy zone. As you all know, it doesn't matter what you trade, you have to employ money and risk management. I was looking at some of my email before I started making this video, and there was this one site that talked about the top 100 indicators. And so, of course, I had to go look. And there was more squiggly lines than you could shake a stick at. And then I was watching a Tim Ferriss YouTube video. If you don't know who he is, he's the guy that wrote the 4-Hour Work Week and a bunch of other 4-hour books. And he said something about this chef who only had a $20 knife and just 2 cast iron skillets. That's all he had. And he talked about, the 80-20 rule. Find that, 20% that'll get you 80% of the result. And I got to thinking about indicators. And I realized that, looking at that site with all the squigglies, is that when you add these indicators to your chart, are you trying to have the indicator tell you something you already know? Or are you trying to have it tell you something that you don't know? Now, if you really ponder that, you can see it's kind of deep. So for example here, this indicator shows me what last week's high was, what last week's low was, what last week's open was, what last week's close was, and what last week's mid was. It's telling me something. Now, I can look and see what it is, but, it's pointing it out and telling me something. Now, these squiggly line indicators that are here, all over here, they're telling you something that you, quote unquote, don't know. But do they really tell you anything is the question. I mean, like the dashboard here, it tells me which gaps are filled and which gaps haven't. Now, I can look at the chart, but rather than having to look at all these charts, I can just look down the column and say, okay, this gap hasn't filled, this gap hasn't filled, this gap hasn't filled. But the other thing about indicators that's really interesting that I realized was when you use an indicator, especially one with the arrows that flash, buy, sell, it takes the pressure off of you, and the indicator can be the scapegoat, or the system can be the scapegoat. Oh, that doesn't work. That EA doesn't work. That indicator doesn't work. See, you can blame your loss on the indicator. Takes all the pressure off of you. So rather than having to really learn how to trade, you just get the indicator, do what the indicator tells you, and then, after that indicator doesn't work, you find some other indicator and you just repeat that price until you have no more money left. Or, repeat that process until you have no more money left. I mean, really, if you think an indicator is going to, put you on the path to profit, well, I wish you luck. We're looking at the buy zone. Is the buy zone really an indicator? It's just some horizontal lines, right? I mean, shows you where the open is, and, 8-10 pips above it, 8-10 pips below it. No big deal, right? I mean, you could look on the chart, see where the open is, and you can calculate these in your head. You really don't need these. These are just, for visual. So when you look at the chart, you can see where price is relative to everything. And, you can see here, high to close 28, close to low 14. So that's 42. And these are, once again, 20 pips apart. You can't fit 42 into 20. So price had to leave the zone, right? It had to. So you see here, it triggered a long, and there was profit. Here it triggered a short, and depending on where you placed your stop loss, you might have got burned. And here it triggered a short. Then it triggered another short here, but you see it did make a new low. So these should have either been a small profit or just a scratch trade. And in this case, it triggered a long and then went the other way, which may have resulted in a stop, or it probably should have resulted in a stop. But the point is, you see from high to low encompasses the buy zone. That's just how it works, and it works every day, right? We see it every day. It's not difficult. Once again, it's been proven 4 ways, statistically, geometrically, with arithmetic, and with physics. I mean, it's just that simple. Now, some people have problems trading it, but there's something else you need to think about. From the open to the high, if it's negative, this is the wick. Now, if it's positive or green candle, the distance from the open to the low will be the wick. Now, if you've been watching my videos, you know we analyze wicks, we analyze candles. And so, the rat zone tells you that usually price, depending on the pair, is going to move so many pips from high to close and so many pips from low to close. And we'll get into that when we do the rat zone, which I believe is coming up next week. I think I was going to do these in the order that I created them. So first came the buy zone, I think then came the rat zone, then came the wick zone, and then I think holo zone came before the wick zone. I don't remember. I might have to look it up. I might get those two out of order, but it doesn't really matter. Point being is that from here to here is either going to be the wick at the end of the day, or from here to here is going to be the wick at the end of the day. So if you know how big the wicks are, usually based on the frequency distributions, okay, if price has only gone so far, then chances are it's going to go a little bit further based on the wick size. You see how that works? So you see here, right here, that's only maybe 9 pips, but the wick is usually bigger than 10, so maybe you stay in that trade. You see how that could work? It's just something that you have to analyze, and you look at price action live, and you just see what happens. Because remember, we had an open, went up, and it came down, came all the way back. Had an open, I think it went down, came up, came back. Had another open, went up, came down, came back. Had an open, came down, passing there, coming back. Time to exit the trade. I mean, sometimes you're just going to have to take a scratch or, 1 pip profit. It's just the way it works. I mean, here you got a trigger. It went across that wick. It was above the open, but you see it's coming back. So I hope that gave you a couple of more hints on the buy zone, and remembering from open to high or open to low. Actually, I didn't say that quite right. You see from that open to here, it's going to be a wick if it closes green. If it closes red, from here to here will be the wick. So I hope that clears things up. So let's just take a look here through. Once again, there's the yearly open. See, price is struggling to close above it. And we look at the monthly opens. Let's see. Okay, guess what I didn't do? I forgot to put in the April. And nobody told me. Come on, traders. First day, trading day of the month was April 1st. So we got 19. And this is the TR 2016 plot by date indicator. You can show different levels there. Okay, so you can see we're above that April 1. Now, look over on the dashboard. You see we entered the wick zone, didn't come out on the top side, wound up coming out the bottom side. Range only 42, only one pair above 100 today. Now, it's Thursday. Tomorrow is NFP day, and that might be why the ranges are so small. I mean, look at the dollar yen 29. And sometimes you just might have to take a look at that. You look at this whole screen and go, geez, ranges are down. Maybe I'll take, 2, 3, 4, 5 pip profits today if I'm trading, or maybe I'll just sit it out. I mean, you come to your screen, New York time, New York open, and it looks like this. Well, the market's telling you it's just not moving. So you have to adjust your decisions accordingly. Okay, missed pivots. We missed the first day of the month here. We've got one missed one from last month. And we've got the 2 January misses and 2 misses for 2018. Now, I have a suspicion. I think tomorrow the dollar's going to get smashed. In other words, the things like the USD JPY is going to drop. I could be wrong. I just have that gut feeling. We'll just see what happens. Wick zone in and out. We showed that earlier. And you can see on the tick, not much movement really. Only a couple of pips, which once again goes with the lack of range. You can see here we had short triggers, maybe a 1-2 pip profit at best. It's just not much happening. It's no movement, not much range. But let me go back to that one range screen here. Do you see how every range is above 20 pips? So that means price had to leave the buy zone, that 20 pips, the open plus 10, open minus 10 area. Now, once again, you can do +5, -5 if you like. If you run statistics and you see it works better on one or more of the pairs, then you can go for it. And let's see, where was it? Where is it? Range for the day, 42. For the week, 101. And you can see here, that was H1. Switch back to the day. And once again, you see there's no use for the euro yen, no ranges under 30. So that's it for today, fellow traders. Indicators. I mean, it's not what you trade, it's how you trade it. So get out there and drain the banks.